How is everybody doing? Today, I just wanted to hop on here, kind of go over a simplified version of, right, an in-depth on how I look at the chart. Right, it's not exactly like this every day, but it kind of goes in depth on how I combined almost, everything given by the people, on Twitter and fucking, just pretty much how you can combine everything from every normal trader and make it make sense and align it perfectly with a narrative and be able to take a good trade. um, you can take plenty of good trades just based off of a market maker model itself, right? But aligning power of 3 in there as well as a CRT, they all usually line up. You might not get a CRT, but that's not the enigma to trading, right? Aligning all of them is. And you see all the time people saying CRT is MMXM, or right, you need whatever, just saying CRT is the best out of all of them. And in my opinion, that's not true, but right, just seeing all of the confluences line up and align and just narratively make sense, it all kind of falls into pieces, especially with this trade we took on Thursday with CPI. We took this long in the Discord. Right, we can see our smart money reversal into our market maker model, and that's closer on the 5-minute with our original accumulation, right, into our Asia high. This is the London high, but we had an SMT into the Asia high as well as generating more liquidity above, right, with our previous day high coming into a Thursday, anticipating a Thursday high of week for our weekly profile, and into a daily profile, just knowing that Thursday is going to draw to this higher liquidity. I wasn't able to catch the short lower, right, knowing that this is accumulation, manipulation, then distribution lower. Right, I was more focused on, seeing, right, how we've accumulated, manipulated, and then distributed higher time frame lower, or excuse me, lower time frame higher. And I also just didn't want to keep trying to catch a top when, right, I caught one, and I didn't get burnt, but it just was just kind of annoying to me that I wasn't able to hold that. But that doesn't really matter. My emotions shouldn't matter in trading. But I'm really not just looking to catch a long swing trade. This was a great trade to catch just for the day, but honestly, I didn't think we'd get that movement back down into the range and then distributing through. But hindsight 2020, it was a super obvious accumulation, manipulation, distribution. There just was no decent entry, right? Obviously, once we get to a certain point up here, I know we're going to keep reversing and draw lower. It's just, right, how good of an RR will I get compared to, right, where I think we'll draw to. Didn't think we'd technically get to PDL like we did, but it is what it is, right? We still caught a beautiful trade and we're able to capitalize and bank onto the day. We're going to get into some of the notes and then dig a little bit deeper into this trade on how I was able to catch it on ES and NQ. Going over all our notes, manipulation is, right, a key point into our power of 3, accumulation, manipulation, distribution, and it shows many different forms, but it's all the same concept. Right, going along with power of 3, AMD, the open, high, low, close, right, it's all the same type of stuff. Same thing we see with the Judas swings at the open and into London. Also, right, with a weekly manipulation, we've seen our daily manipulation on Monday, Tuesday, and Wednesday for our Thursday reversal. Power of 3 as well, right, our open, high, low, close. In a textbooks model, we like to look for is that Asian accumulation, London manipulation into a New York distribution, as well as our 830M, 930D, 1030C. Understanding the key points and the phases on how they apply to different sessions is very key, and as well as understanding our time-based liquidity to use our AMD to find our to anticipate market moves. Market maker model, market maker buy or sell model framework is pretty simple, using our time frame alignment and understanding that it's not right, we don't have to use the weekly to the 4-hour exactly. If it's a monthly or weekly PDA and it aligns on the 4-hour, then we go down to the 1-hour and we see the same type of conjunction on top of each other and they're all overlying, right? It's not just weekly on a 4 hour, and then we hop down to the 4 hour to the 15, right? We can use all of these time frames to fill our confluences and right, give us a little bit more confidence each and every step of the way. Going along with if they don't align, right, don't take a trade. They will align if you're looking at it over and over again and see the confluences that I'm able to see, because I see not plenty of setups every day, but almost one setup a day. And right, like I said on the Discord, we're able to catch, multiple setups a week, right, with all of these confluences in place. We anticipate our move up or down with accumulation ranges, anticipating a reversal, confirming the reversal after, right, a break above our accumulation leg, finding an entry, and finishing the market maker buy or sell model. At least 2 legs of accumulation for a confirmation before we have a confirmed reversal, right, for our sell side or buy side of the curve into, right, our, if we're coming down with a sell side of the curve into our buy side of the curve, or if we're coming up with the sell side, if we're coming up with the buy side, then coming down into a sell side. As well as adding our obvious smart money divergence. Keeping in mind, we need SMT at key reversal areas, high time frame or low time frame SMT inside of the high time frame for more robust setups. Adding candle range theory using the application of identifying key levels and manipulations using candle ranges to determine potential purges followed by closures back within the range. With an example of a 5 to 9, if you use 4x, or a 6 to 10 for our indices chart. A lot of the times we'll see a 6 p.m. CRT with a 10 p.m. inside bar and or a 6 to 10 CRT for a 2 a.m. purge and then to a New York continuation. Right, like we saw an 8:30 or 3 a.m. Judas. If we're in bullish order flow, we look for a manipulation down. If we're in bearish order flow, we look for a manipulation up. We're going to choose one session to analyze delivery across multiple trading days, understanding each candle close and open, why and when and where we purge, what high or low for our turtle soup to then confirm our reversal into our distribution, applying AMD, market maker models, candle range theory, and looking out for SMTs, all aligning into a great A+ trading setup while being able to catch the turtle soup. Not even waiting for the breaker, not waiting for an IFEG, not waiting, the only thing we wait for is a rejection block or an order block. And I don't want to say half the time, but some of the time, we don't even wait for that. We just know where we were reversed from. We'll hop onto the chart, get a closer look into the trade we took Thursday with the Discord on NQ and ES. Another day at trading at all-time highs. So, coming after a PM closure above our previous day high, we already understand that our draw is going to be above our previous day high. Pretty simple, right? Pretty straightforward. We look at our overnight session, and even, thinking of a different time. Right, but we look at our overnight session, see that we've accumulated inside of our trading range. We've also accumulated within our 4-hour candles. We zoom into our 1 hour. You can also see our 4-hour inside candle with our 2 p.m. CRT into a 6, 10, and 2 accumulation inside of the range, coming into a 6 a.m. delivery. We zoom down to our 1 hour, and we notice that we've created equal lows into our Asia low, but we don't run it. Why is that? As we saw on ES, we had the 4-hour fair value gap resting below. And what we did is, as we saw with all of with our Model 2, we saw us dip down, have an SMT into the fair value gap. And what we call that there is an SMT fill turtle soup. Or an SMT fill, right? Whatever. Divergence. However you want to say it. What gives me the confidence to take the low down here like I did? If we, right, this isn't hindsight, 100% took this trade live on a Trade of 8 account in the Discord, sent it beforehand, sent that I was in the trade, right, even recorded it. What gives me the confidence to enter inside the 5-minute wick and add in before a CPI candle? The SMT, the CRT, and this wick, we don't wick into this low as we see on the 1 hour, right? But the SMT into the Asia low tells me that that low is protected until we run our next swing, or our previous swing high. After seeing a CSID on the on ES chart, after dipping into the higher time frame low and then delivering higher, it gives a sign of a reversal. And that allows us to catch the 1-minute order block, which is inside of the 5-minute wick. As we see, there's no fair value gap. We would have placed our limit at the body, as we've seen in our Model 1 video, with our, right, leaving a fair value gap on an open order block. We'll leave it into the wick if it's right closed, which would be the next candle, and us being confident, right, we would set it right on the next candle, we would set it on the body, because there's no fair value gap formed, because it's the next candle. If that one then forms a fair value gap, then, right, we can move our limit up to the wick. As we can see here, we have an accumulation range, a manipulation, distribution. The market maker is a little bit sloppy, but depending on how you see it, we have an accumulation range, right? An accumulation range, and you can look at this whole thing or just the small thing. But on the 15-minute, right, it may look a little bit cleaner, right, with an accumulation range here, and you're like, oh, what is this? We stayed within our trading range, so to me, it's just an accumulation. It is our smart money reversal on our NQ chart, right, but it just created equal lows to then use for liquidity later into the session after manipulating higher with our, with our CPI candle. Here we are in the Discord. Also, you can see the time, 7:11, 7:27. We have me here in the trade below, right, in the 5-minute wick, in the 1-minute order block like we showed, and the MES chart with our turtle soup. Obviously, stick to what's working, long till it hurts, plenty of liquidity to be drawn to above, to and above the high. Bam, plain and simple, right? Took one at previous day high, and then above the high. I think it was at the even number of 950, to be honest with you. But I can't remember exactly. Here's MES. Right, pretty simple. Stop loss was kind of huge on this one, but I wasn't really worried with it. And as we can see, right, on our trade of 8, on our, for MQN, we took I think it was 5 or 6 cons, maybe 7. And then same thing here, 5. Trade of 8 as well, so a pretty good day. Obviously not a huge day or nothing, but if you've been in the Discord, right, we're taking chill days and just stacking bread. Not going for anything crazy, just taking our cons and letting them run and taking good trades. That's all you really need to do just to be profitable. And, even with the 5-10% win rate and a whole bunch of break evens, I could still be profitable. Just right, take it slow and steady. There's no reason to rush into it every day. Get better and better, and right, those bigger trades will fall into your hands. Coming into the end of the video here, right, I wanted to go over a couple more notes, but obviously there's some more left on the chart, so always dig a little bit deeper. Even one key note I like to see here is that coming in to our 8 a.m. candle, we had an SMT at the low that drove us higher. That 8 a.m. SMT, right, is very key, especially with news days. You see that low into a key level on the higher time frame before news, you almost just guarantee that that low is going to become protected, and you're going to catch the 1 minute low. Right, like we talked about on the notes, we see our 8:30 manipulation into a 9:30 continuation, a 9:30 distribution into a 10 continuation. What you'll see a lot of times, like we talked about in our double manipulation video, is that 9 open, right? Say we come down, right? We'll see that 9 open, manipulate higher, and then distribute lower for that continuation. That's a perfect time to be able to catch yourself within the trade like we saw in the last video, or maybe a couple videos, but it was a bullish scenario, right, where we were accumulating, right, and we knew our draw was higher, but coming into our open, we understand that we need to manipulate lower. We caught ourselves perfectly within the 9:30 low. It's like 9:32 maybe, but the open low, and understanding that that open low is going to be protected and then used for our continuation higher, whether we accumulate or explode up in that direction. Hope you guys enjoyed the video. If you guys saw on Twitter, right, we took this degenerate trade with the SMT sweeping the low and closing back inside the range. We were able to enter roughly around previous day low. My dumbass pulled the stop. It was above break even, right? Our break even point was either the wick. I was in the wick, and I pulled my break even just a little bit above because I wanted the recording to be able to see the thing. And I know you can like right click it and just hit no cover, but kept moving the chart around, so I was just like, all right, I'm tired of clicking it over and over. But honestly, right, TP wouldn't have even hit because it was the Asia high. And the news manipulated downward, so it would have been break even as well. And I'm not going to be like, oh, I would have got up at, right, 5 through 6 in the morning to be able to catch that. Even, right, coming right into 8:30, I might have been able to be up and catch it, but, right, most of my cons were out here anyways, so it's not like that's that much big of a difference. It's, alright, it really wasn't. But, right, I saw when we got to this high, I just got some of my cons out, and then the rest went break even. But yeah, before I keep yapping and whatnot, I'm going to go ahead and end this video out here. Like I said, guys, just keep looking at your charts, keep studying. There's a lot that I didn't cover in this video, but there's a lot that I did to be able to, right, get your mind looking into what you need to be able to look at. We'll go over a couple more things. Right, always free videos coming out, always videos going to be posted, but, right, just, it'll come to a point, right, where you just, you'll see this low put in, either we'll barely sweep it, right, and, right, I had these highs, and, right, these highs put in for our draws on liquidity the night before, and, even though we manipulate lower, we know we're going to manipulate lower before delivering higher, whether it's, understanding we SMT the low, and or just come into our PPI manipulates, then distributes, and just understanding how the news event works, that's usually what it does. Same with CPI coming into a wick, then a distribution, but us being so bullish, I'd rather take the long than the short, and then get a more confirmed short once we start turtle souping these internal highs, these internal highs. I almost said and lows, but right, yeah, cool. You've seen a lot of people take this short. It's fine, right? We'll get plenty of thousand tick shorts like we've been able to catch with the longs. So it's just another day at the office, but Yeah, definitely I need to quit talking, and I'll go ahead and see you guys in the next one. Have a great one.